So I wanted to do a continuation of yesterday's video that we did last night, recapping what the Fed did and what the effects of the market was going to be. So a lot of you guys said, Dan, you don't have a clue what you're doing again because the stock market dropped over 200 points. So then I commented, and you can check those comments below. I'm going to put yesterday's video right up here. I said, give it about 24 hours, because in most cases, when the Federal Reserve does something, and we've seen it 10 or 11 times already, the initial reaction in the markets is one way, and then it settles, and then it seems like the next day it has a complete reversal. But let's just go over some of the headlines that we're seeing here, and let's address some of these things. So Fed holds off on rate hike, but says 2 more coming later this year. I didn't hear that. I don't know if you guys heard that. But then you also have stock market says the Fed will cut rates soon. It just may be right. So now they're saying that. Then it comes Powell says Fed cuts are a couple years away. Okay, whatever. Fed's decision, not a clear story from the Fed going forward. So one says they're going to raise rates twice by the end of the year. One says they have no idea what's going to go on. Then others say there's no cuts into. So let's look at a story that was out a couple years ago. Fed's Reserve said it will keep interest rates near zero until 2023. Interesting, because this was in 2020, in the latter part of 2020. And then we went over to 2022, and we saw this, no rate increases until 2023, but we had 1, 2, 3, 4, 5, 6, 7. So that's what I'm trying to explain to everybody. Guys, you can't listen to what the Fed's saying because they're trying to talk their way through this, and they're doing a fantastic job. But I don't want you guys to be bamboozled with the information they're giving us. So now that the dust is settled, let's go over and see how my predictions worked out. So we go over to the stock market, and this is all the stuff that came in. So we have to analyze this data before we go do anything else, because this is the same data that the Federal Reserve is watching. They want to see inflation cooling, unemployment raising, or more people going out of work, and cost of things just coming down. So when we look at the calendar of just the economic events that took place this week, everything is going down or going exactly the way the Fed was hoping. So now why would the Fed come out and say, okay, we're going to cut rates and pause and do all this other stuff? Because all the work that they've put in is going to be kind of retracted out of the markets. But let's go over and see what's the stock market doing right now. So we go to here, and well, now the stock market's up 428. It was up almost 500 points not too long ago. S&P's up, NASDAQ up, everything's up across the board. So that's what I was talking about yesterday. Then also we go over to mortgage rates. Where are they? Well, right here's what you're seeing on your screen. This is giving you the idea or the information from the bond market of what mortgage rates are going to do. So normally when stocks rally, well, mortgage rates, they go up, okay, because you can invest in bonds and stocks and a whole bunch of other things. So I won't get in there. But usually when stocks are doing well, the bond market isn't doing well. There's kind of a yin and yang there. But we're seeing right now that the MBS market is up 33. That means mortgage rates are going to come down about 1/8% just off of this data just today alone. So yesterday's events, we kind of put a little caption on that. And I said, guys, wait, because this data is going to recorrect itself. And it just did. So that's what we're looking at right there. And again, the stock market is loving this and the bond market's loving this as well. So I want to answer a lot of the questions of people out there saying, hey, Dan, is it a good time to lock? What should I do? And so forth. So I hope you guys understand, I'm a mortgage advisor. I'm actually licensed all over the country. I work at a federally chartered bank, meaning I can lend anywhere in the country. But also, I'm one of the country's largest mortgage brokers. So that means we can offer you the bank products as well as offers from or programs from probably almost 80 different lenders, 80 of the country's largest lenders out there. So what it gives me the ability to do is I can run your loan scenario through our bank and then say, hey, wonder if there's a better deal out there for the borrower with some other place. So it allows me to check over 80 different companies to be able to offer you their programs and their rates. Okay, so how do you do that? So one of the first things is if you already have a rate quote out there, just go to our website, therateupdate.com. Just go in here and hit loan estimate. What that's going to do is when you apply at a bank, what they have to do, or any other lender, they have to send you out what's called a loan estimate within 3 days of pulling your credit. Okay, it's going to lay out the whole thing, but it's going to lay out the rate and the fees. That's the main thing we're looking at. Let me compare your offer with our banks, what we can do here at the bank, and with 80 of the country's largest lenders out there that I have the ability to put you through. So that's my video for today, guys. Just giving you some insight to help you guys out there when you're house hunting and to help you get the best rate and the right program for your needs. So I hope you find value in my channel. I hope you're getting educated from this, and I look forward to seeing you tomorrow. So if you didn't do it yet, please don't forget to subscribe down below, and you get alerted every time I post a new video. So thanks again, folks, and I'll see you tomorrow. Bye-bye.